Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, June 13th, 2014. In this video, I wanted to go over gold, silver, and some of the associated mining stocks that are trade ideas on the site currently. We'll start out here looking at a weekly chart of gold. This chart and some of the others that I'll talk about today are available on the live charts page on the site. If you navigate to the top menu of the site, click live charts, and this will take you to the live annotated charts on stockcharts.com. Most, but not all of these charts are updated. I'll try to have all of these updated by the end of the week, or by this weekend, I should say. But for now, this is the long-term weekly chart of gold going back. This trend line generates off, it looks like, the October 2001 lows. So we have a long-term uptrend line on gold. Again, this chart has been discussed quite a bit since late last year. I think it was about October, so I started really pointing this out as being my downside target, this downtrend line, and that downtrend line was hit right at the end of the year in December. And since then, we had a nice bounce, made for some very nice trades, especially in the mining stocks. And I've continued to maintain this is most likely just a natural, healthy overbought pullback. And just recently, I pointed out that gold back on June 2nd kissed that uptrend line, and so far we've moved off it. I know you can't see that on this chart. I have this chart really zoomed down quite a bit in order to fit it into this video capture software. But again, take a look at the live chart links page and you can see that a little closer. I'll go ahead and zoom in on take a look at the daily chart real quick on gold. And again, what we're looking at are the spot prices of gold. This is an end of day chart. EOD means end of day, so that means stock charts will update this daily. You can take a look at sites like kitco.com. They'll give you live quotes on spot gold. You can look at gold futures, or of course just follow the GLD if you want to get a feel for what gold is doing intraday or during regular trading hours. So zooming in, looking at this daily chart, you can see a little bit better here. When we hit that long-term uptrend line, that was right down here at the lows. And so what that has done, we've had a nice bounce so far, nothing major. But most importantly, we have seen a reaction and a sustained reaction so far. Several days, couple weeks actually, of prices moving higher, and that has set up sort of a channel, a descending channel. This is the daily downtrend line, this R2 primary downtrend line on the daily chart. We're looking up here at the highs back in September, October. So we have a nice downtrend line, which I've been focusing on for weeks now. We had that one failed breakout. Prices came back down. And, depending on how you've drawn, I'm sure everybody has different drawings, but this is one of a sort of a triangle. If you see this small uptrend line here, that formed that symmetrical triangle there, and we had the breakdown of gold, and this really ramped up bearishness. A lot of people throwing in the towel, calling for new lows on gold, and it did sell off quite impulsively. That was a pretty well watched trend line, but so far gold has rallied off the weekly support, and as I often talk about. I will always give preference or higher priority to the longer term time frames. In other words, if gold were to break down of a daily or a 60-day price pattern, but then fall to support on a weekly chart, the weekly chart should always give preference over the shorter term time frames. And that's one reason here that although that may be construed as bearish action and there may be more downside, if and when we make a solid break and weekly close below that weekly uptrend line in gold, then the bearish or the bullish scenario is really starts to be called into question, and ultimately we have to see these late December, mid 2013 lows taken out because there's still a chance of a triple bottom in gold. That's not my primary scenario. That would be, let's say, the alternative bullish scenario would be a move down somewhere in this range. Probably my guess if it did move down here, it'd probably be slightly below to give a nice fake out move, false breakdown. But we'll have to cross that bridge when we come to it. So first things first, and that would be to watch that weekly uptrend line. And then more importantly, we're in close proximity right now to this daily downtrend line. And as I've been stating for weeks, I commented shortly after this failed breakout that was likely to happen because of the extreme overbought conditions in gold at the time it did break above that trend line. So we had the usual bull trap reaction, some impulsive selling, which really continued into these lows here. So again, let's watch for a break, because I do believe the next solid break out of this uptrend line will be a longer term buy signal for gold and the gold stocks. Okay, now we're looking at a daily chart of silver, spot price, end-of-day spot prices on silver. This is also available on the live chart page. So you can take a look at the notes. Nothing spectacular. I have several different, trend lines here drawn, but the ones we're looking at here, this black downward sloping trend line right here, compared to the MACD, the RSI, we have nice positive divergence setting up, or in place, I should say, not setting up. That divergence is already in place there on silver. And silver so far has been, like gold, making a series of higher lows so far. Really about equal with these prior lows, but so far, silver, just like gold, is still well above the mid-2013 lows. So all in all, I'm not going to call it extremely bullish action. It's more of a basing pattern. This is going to go one way or the other. Prices have been basing now for going on a year. And imagine sooner than later we'll either break to the upside. The next key level would be this downtrend line right here that I have drawn. I have to extend that out. That's quite a bit above, but again, for the time being, I put a lot of stock into these positive divergences. Let's see if they play out. As you see here, a dotted line is the next horizontal resistance level, and I would put that as a pretty important level. I think that comes in a little shy of the $21 area, maybe about $20.50 or so. So let's keep an eye on that. Okay, moving forward, let's take a look at the mining sectors now. This is SIL, the Global X Silver Miners ETF, which just hit its near term, the second and final near term target. Just over a week ago, this was posted as an aggressive long entry on a break above this R1. I had this pattern here drawn between these yellow trend lines, a slightly contracting channel, and I posted that as an aggressive entry on a break above R1, and then the alternative, more conservative entry on a break above R2. Technical analysis has been playing out really well with this. You can see the breakout, an impulsive move higher. We came back to back test that R2 resistance level, which at the time, of course, became support. And from there, prices really haven't looked back. A very impulsive move higher, a little bit of consolidation up around my first target zone. As you can see, we consolidated here a little while. And once that resistance level was broken, as you would expect with technical analysis, you see a breakout and then boom, an impulsive move up. Along the way, we've had a couple pullbacks. And as I mentioned, before this target was hit, I had extended the a second target here using the 60-minute time frame, which I just flipped to. We were looking at the 15-minute time frame a minute ago, and I pointed out this larger descending price channel. Nice parallel channel. There was that same resistance zone. This was the first target area on that 15-minute chart. And once prices broke through here, boom, we ripped right up as expected. A pretty quick move and hit the 1270 price target today. So I talked on this before. There were some Fibonacci levels there. It's nice horizontal resistance. If you look at all the reaction highs, you can see here silver bouncing up against that level. And before it broke down with this big gap right here, prices were knocking around on the upside of that. So to me, this is just one heck of a resistance level right now. And as I posted earlier today, my preference was to book profits at this time. If and when we do break to the upside, which at this point I do favor over time. However, I would love to see prices at least consolidate or pull back. I think this would be a nice pullback target. There's a gap right here call it around the 1230-ish area. That's sort of the scenario I drew on the last update I posted today. So it'd be nice to see a pullback to that area, then a punch up, maybe one more tag of that level, pull back, and then punch through. Now, I might be getting a little bit micromanaging on the call there, but that's how I'd like to see things play out. And of course, as I've mentioned before, it is a must to see the metals themselves, gold and silver, follow suit. because if I see a disconnect and gold and silver start turning down and these miners continue to catch a bid like this, a lot of traders, momentum traders, are sometimes just, they have tunnel vision. They're narrowly focused, and they're playing these miners right now because the trend, that's what's hot right now. That's the current momentum group, and I'll play those as long as the metals themselves are confirming the move in the miners. Because if it's not, as we all know, the miners ultimately follow the metals, and at times you get these big disconnects. But the reversion to the mean, if gold and silver start turning down from here, especially if they break support and the miners continue to rise, at some point there'll be a violent and pretty sudden correction. So that's, once again, I want to see a catch up here, or at least a sustained move up. The metals have been moving up, and I want to see that continue, especially if and when silver breaks out. Let's take a look at GDX real quick, the gold mining ETF. This was the 15-minute chart. Again, this was a static chart posted recently. You can take a look at that. I only had listed this one 15-minute target on gold. On GDX. GDX is also a long-term trade idea. As I mentioned, there are sometimes trades that I will have both as long-term trade ideas for longer-term investors, and at times I'll micromanage that trade. A good example is, back a few months ago when GDX peaked out, I posted closing my gold mining positions, and I even took a short in GDX, off the highs, where meanwhile it's been a long-term trade idea. I do have accounts, some longer-term accounts, that I've left a very small position on GDX, even though I've took some profits back there. But again, you have to define your time horizon. I know some people listening to this video are long-term investors. They don't have the time or the inclination to trade the intraday charts, and that's fine. That's why I do focus on the weekly charts and longer-term charts. And I just wanted to make that clear as to prevent any confusion on the site. If you see, for example, next week all of a sudden I'm short some of the gold mining stocks. Are you bullish? Are you bearish, Randy? Which is it? Well, longer-term bullish, near-term bearish, if that is the case. But right now, I have no interest at all in shorting any of these stocks, but I do think it's prudent to book some profits because GDX is with silver, the silver mining ETF. We're at resistance. And I think as you can see on this silver and gold charts, I probably should jump back to those. Actually, let's do that real quick. We're looking at the charts on TC2000 here, but here's a downtrend line in silver that's just overhead, a key downtrend line. This chart is going to be drawn a little different than the one that I just showed on stock charts. That was actually spot silver prices. This is the ETF SLV. So we have this shorter term downtrend line, this white downtrend line, we have a breakout, but then we have this longer term uptrend line that goes all the way back here to late 2012 coming into play. Above that, there's some horizontal resistance levels. So, it's not smooth sailing for the metals. There are some key overhead resistance levels for both GLD and SLV. Here's a key downtrend line on gold, going back all the way to mid to late 2012. That's the same downtrend line I talked about a minute ago on the spot gold chart. And you can see prices have really been pushing up against here. And so not only do we have a few horizontal resistance lines here that I have drawn, but we have to watch this downtrend line. So all in all, we caught a nice run. I didn't have a lot of names out there on these short-term trades, but the SSRI, GPL, I actually still have positions in those two, but SIL I've closed out. AUQ has already hit the final target. So we had some nice trades, and I think it's prudent here for shorter term traders to book either partial or full profits on those trades, or keep an eye if SSRI happens to hit its next target. It might be time to take some off the table. Okay, that's gold. Okay, this is AUY. AUY was posted as a long entry and set up a few weeks back on the site. At the time, I showed 3 different time periods, the 60-minute chart, which we're looking at here, a daily chart, and a weekly chart. On the 60-minute chart, the trigger was a breakout of this bullish falling wedge pattern. Prices did break out, came slightly below the pattern, And I listed various stop parameters depending on which price target. AUI had, let's take a look at the daily chart. T3 was my highest price target, and for that I listed using a risk to reward ratio, the RR of 3 to 1 or better. I think the stop parameter was 18% below the entry price. So we didn't even come close to being stopped out because that was in the mid sixes. Quite a move down. 18% sounds like a huge stop loss, but when you quantify the percentage gains, let's just take a look here. Put a line here. Let's see if I can do this. Yeah, here we go. I think the breakout was somewhere around there, and you can see that would be about ballpark figure 70-75% return to that first target. So I'm sorry, third and final target. So if you're swinging for the fences on this one, a longer term bull, then you want to use those much wider stops. As I often talk about, scale in versus taking the full position, and keep your positions light. That to me is just critical with these miners. They are so volatile. A lot of these names you can see double-digit price swings in a single day, 10% or better. We've seen that recently. So again, keep your position sizes light, diversify, use a shotgun approach. If you're going to trade individual mining stocks, better to spread it amongst 5 or 6 or more versus trying to just put it all on one or two that look good in case those don't pan out. If you're going to do that, you're better off with just trading the GDX or the SIL. Okay, zooming out to the weekly chart on AUY, Yamana Gold, what we had here. I noted at the time we had some positive divergence, and that divergence has actually extended. We continue to have positive divergence, even on a larger scale at this point. And it's nice to see that PPO here is starting to curl up. It looks like it's poised to make a bullish crossover soon, which would put this divergence confirm this divergence. I like to say at this point we have potential divergence, but it's usually once that we get that bullish crossover on the PPO or MACD, or prices turning up on the RSI, which they have here. The divergence is now confirmed and in place, and looks to be confirmed soon here on the PPO. So by divergence, I mean the PPO making a higher high, RSI making a higher high against prices. If we focus on this lower line here, making a lower low. So then it made that lower low right on the support level. We had these reaction highs back in 2009 after the meltdown. We had that initial rip up, and prices came here for several weeks and back tested this level. And so basically we have prices setting up on with bullish divergences in place as they hit key support on the weekly chart. So again, longer term, I think AUY has a lot of potential here, and this would be an alternative target. There's a downtrend line I can draw here. Not a solid downtrend line, but it does sort of form a parallel line, and it gives a price channel here. So that is one alternative target to the ones that I mentioned on the daily chart. This is GPL. GPL was just recently added as a long setup, and then it broke out, had a nice move out of the bullish falling wedge pattern. Positive divergences in place under that bullish falling wedge on the MACD here. And now this is a very thinly traded stock and a low price stock. You put those two together, and a gold stock to boot, a silver stock. So you have one of the most volatile sectors. You have a very low price stock, about $1 a share. You put those factors together, and you better adjust your position down in this stock, or it'll take you for a ride. These low price stocks, especially in this sector, big moves, 5% plus gains are pretty much the norm in this stock from day to day. So that cuts both ways. So far, it's playing out pretty nice. We're up. We're positive on this trade, about halfway to the first target. Like I said, I have my concerns about the silver sector, but this pattern looks good. So GPL is one I own, and I'm still holding on and holding out for at least that first target. Quite a few reactions there, going all the way back. So I do expect a pullback, maybe a consolidation at that first target level. But again, the way I trade these stocks is I keep an eye on the overall sectors. I'm looking at SIL, GDX, GLD, SLV, and I take it as a whole. If I find that the sector itself is up against resistance or likely due for a pullback, if GPL, let's say, hits this target in the next couple days and I still expect a pullback in the silver stocks, at that point I would probably book profits or at least tighten my stops up very close to that level to protect profits. So that's GPL. We're looking at a daily chart of Harmony Gold, HMY. This was one of my top picks back in the beginning of the year. Nice, falling wedge pattern, textbook technical analysis on this one. We had a breakout back test, first target hit, second target hit, third target hit, and for very considerable percentage gain. I don't have them listed here. And then prices pulled back here. It pulled back to support. I mentioned that as an objective add-on or re-entry at the time. And it did hold that support for a while. Prices finally gave up, and as you can see, this is technical analysis. Once support's broken, you see, boom, a quick, impulsive move down. However, bigger picture, just like gold and silver, what we're doing here, so far we've made a higher low. So if you look from a longer-term perspective, that can be viewed as a bullish price action so far. Let's take another look at this, another chart. Okay, this is Harmony Gold from a weekly chart, and what it looks like here. Let me move these notes. Potential head and shoulders pattern forming here. Let's try to draw that out. Pretty much you can see it. If we see prices move up, that was an ugly draw. Prices continue to move up to this neckline here. What I've done, this is a measurement for the pattern. If you take the distance from the head to the neckline, in this case we have a downsloping neckline, which is perfectly normal on head and shoulders pattern. They do not have to be horizontal lines. Just eyeballing, looking at symmetry, if we do put in a right shoulder and see prices continue to move up to this neckline, the next buy entry would be on a break above the neckline. And again, weekly charts, you want to see a weekly close, and this would be the projected pattern measurement. This was a former support zone that I highlighted months ago. Stock broke below that support zone, and now that's become resistance. We have quite a few reactions. We're looking at a 10-year weekly chart here, so this is a very key resistance zone now, and to me that would be a magnet for prices if and when this inverse head and shoulders bottoming pattern were to break out. So keep an eye on that one, and of course you want to watch it on the daily chart as well. This is SSRI, Silver Standard Resources. This is an active long on the site. We've had a real nice move on this one. Hit the first target just recently. We're looking at a 60-minute chart. This is the same 60-minute chart that I've made some static posts on this trade. So far, it's just working its way up. Yes, the silver stocks are over bought in the near term. But personally, I'm just riding stops up on this one and holding out for at least T2 at this time. Once we get to that second target at 822, and just remember, folks, I always state that I set my price targets below the actual resistance level. There's no set formula. I just do this off experience. I take a look at that because so often, if a lot of eyes are watching the same resistance level, sometimes you'll see the stock reverse just shy of that. Especially on more thinly traded stocks where the market makers can play those games. So, I never try to hold out for the very last penny. I prefer to book my profits a little shy, and it does help missing a fill, help prevent that. So if we get there, I don't know if you can see there's a volume at price, some volume at price histogram bars on the left side, coming out of the left side of the chart here, and there's a thin zone between this third target level and the second target level. So I do expect a reaction there, especially if prices were to hit that in the near term. Now, if we consolidate and pulled back, came back to back test this T1 level, worked off these overbought conditions, this stock may have enough to power up on through that T2 level without much of a reaction. But if we were to continue up at this point, we'd be very overbought near term, and I would probably book full profits on the stock there, wait for consolidation, ideally, or a pullback, and then re-enter on a break above that level, assuming the sector itself looks good. Just remember, this stock can run. I've had some great trades on this one in the past couple years. Had a monster trade. We nailed the bottom to the day back in late June or July, and rode that all the way up to this fourth target level for, that was a move from about $5.50, a near double on the stock, and it did almost the same thing back here in October. So this stock moves, and overbought can become much more overbought, just as oversold. If you look at the dips on these stocks, oversold can become a lot more oversold on this one. So you got to be careful with these miners. Don't let them get away from you. Use stops that are commensurate with your own trading style and comfort level. But when it comes to overbought, that's not a reason in itself to take profits on these stocks. It is a caution. It is a reason not to aggressively add to a position or enter it too late. If you didn't catch this breakout, I wouldn't be adding right now, especially with the silver stocks at resistance. But food for thought. We could continue up to this third target level without much of a pullback, and it would not surprise me one bit. This is ALIAF. This has been a trade since late December, early January. It was posted on the live chart link page, and there's still a link to this trade there. This one just, as I mentioned at the time, this is a low-priced, over-the-counter stock. So be careful with your position sizing. It's going to be volatile. From the lows, it had a nice double bottom. And if you look all the way back to 2009, we had support. You can see just at the very bottom of the screen, the dotted dashed green line. That's my support line. So we had a recent double bottom on that previous support line. Prices moved up. They ripped up, hit my third target for a 63% gain, and have since pulled back. And yes, it's a sharp pullback from there. But so far, prices are now starting to move up. Could be a little early to call this one, but it looks like they're moving up now. And if it continues, then we've now put in a higher low after this double bottom. All in all, bullish price action. I mentioned the high volume, nice volume off the second low here, that double bottom, positive divergence leading up to that. So all in all, this one may have some promises of long-term trade. But again, be careful with your position sizing, especially on these lower priced or over-the-counter stocks. This is EGO. EGO triggered an entry back on January 2nd, a breakout of this falling wedge pattern or this downtrend line. Went on to hit the second target for a 23% gain, came back up, hit that level one more time, went slightly above it on both attempts, but that was pretty good resistance. And since then, the stock, like everything else, like the sector, fell back. But like most everything else we're making so far, I could draw a horizontal line here as a support level for anybody long this stock. We're still above the December lows as well as the mid-2013 lows. So again, longer term, it looks to me like the gold stocks may be pounding out a base here, pounding out a bottom. I know these have been better trading instruments than buy and hold, but keep an eye on this one because we've now taken out that previous reaction high. Yeah, it looks like we've pulled a little bit below it today. Just keep an eye on it, but if it continues to move higher, longer term, this does have potential. I don't have it drawn here, but if you look at the RSI, if I put a horizontal line here, we'd have an upsloping trend line under both the MACD and the RSI. Against a flat line here on prices, which is positive divergence or flat line divergence. So, let's see a solid break above this recent high, and I think that stock can go and challenge that T2 level and ultimately continue higher from there. This is EGO from a weekly perspective, 10-year weekly chart. We can zoom in a little bit. Most importantly here on the weekly chart, we have strong positive divergences. Looks like a nice wedge type pattern. This is a downtrend line, the top of the wedge here. So this sort of jives with what I was just talking about on the daily chart. If prices move much higher, they're going to take out that previous reaction high, which is bullish on the daily time frame. And if we can get a nice solid weekly close above this level, we've then taken out this downtrend line or this top of this bullish falling wedge pattern. You can also see, I don't know if you can make it out, there's a red line behind there. It's the 40-week moving average. which is the same as the 200-day moving average. That has recently capped most of the advances since the downtrend right here. And even back here, it acted as resistance. So that intersects, comes in right with that downtrend line now. So that would be an added plus to see a solid move above the recent highs of about 650 or so, again on a weekly basis. This is HL. This one's also been a trade idea on the site for a while, a long-term trade idea. Hit the second target, made it almost halfway up to the third target after breaking out of this pattern. Nice positive divergence in place leading up to that. And like everything else, we've still, so far have put in a higher low. And I could draw, I don't have it drawn here, but I could add a trend line. Let's see if I can do that real quick for you. A little bit sloppy with that line. Let's try that again. Okay, that would be a downtrend line to watch, and we're really pushing up against that now, so we can almost draw a parallel channel there as well. So keep an eye on this for an upside break. That's HL, and I think that has some room to go. Let's take a look at the weekly chart real quick. Okay, this is HL from a weekly perspective, 10-year weekly chart. My trading style is simple, but usually pretty effective. I put a big weighting on these divergences, especially weekly divergences. You don't get them often, and when you do, whether they're bullish or bearish divergences, they almost always play out over time. And what we have here is positive divergence setting up. Prices have made 3 equal lows, so a triple bottom there. We have a very nice downtrend line here. This is probably the same downtrend line I was just talking about on the daily chart. This was the last well-defined downtrend line break, and we didn't even have positive divergence. We had a little bit of divergence there on the RSI, but you can see the rip, that powerful move. Keep in mind the scaling. I'm using a log scaling, so this is a move from a breakout of around, under $5, 470-ish, all the way up in just a matter of a few weeks to 683. That's a huge move. These gold stocks can be powder kegs at times, especially when you have these nice patterns. So keep an eye on that one. Again, look for a weekly breakout, especially if you're a longer term trader. I'll have to add some targets. I would say the first stop on that one would be about the $4 area, and then there's a gap up around 450-ish, and probably keep going from there. KGC, this one also has a link in the live charts page. This one was a breakout on January 17th. We hit the first price target, then pulled back, hovered on this support level that I had marked, and then fell through. And like everything else, prices broke support. This one actually did go on to make a new low. Overall, longer term bearish, yes. If I extended this downtrend line from the wedge, you would see it probably comes in right about there. We probably back tested and almost back tested again. However, the way I've drawn this is we have a descending price channel here, a parallel price channel with positive divergences in place below. This is the RSI, the MACD, the CMF, money flows, and we've recently broken out of there. So this is a bullish breakout because of the divergences, and let's take a look at a longer term chart. Okay, now we're looking at the weekly chart. So now we have longer term. These are more powerful divergences. Nice bullish falling wedge pattern on the weekly chart. Pretty well-defined downtrend line to signal along. Again, I don't know if you can see it here. There's the 40-week exponential moving average that comes in right about where this downtrend line does. So you've got a little work to get there, and we may get a pullback on the first or the next tag of this downtrend line. But again, that would be a longer-term buy signal. I don't have targets marked up on this chart. Just go off the daily chart for now. Okay, that covers all the active gold and silver stocks on the site right now. There's more out there, and I will try to add the most attractive patterns, but I just wanted to cover the ones that have been listed as active trades on the site. This has been Randy Finney with the Right Side of the Chart. If you have any questions, feel free to contact me.